And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 24th, 2025, and we're diving into Cintas' fiscal 2026 first quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cintas has just released their Q1 results, and there's a lot to unpack, from revenue growth to strategic initiatives. Let's get started.
Revenue and profitability overview. Let's start with the top line. Cintas reported a revenue of $2.72 billion for the first quarter of fiscal 2026, marking an 8.7% increase from last year. John, what are the key drivers behind this growth?
The revenue growth is impressive, driven by both organic growth and strategic acquisitions. Organic revenue grew by 7.8%, and acquisitions contributed an additional 0.9%. This indicates strong demand across their service offerings, particularly in uniform rental and facility services.
And how about profitability?
Cintas achieved a gross margin of 50.3%, up from 50.1% last year. This margin expansion, along with a 10.1% increase in operating income, highlights their effective cost management and operational efficiencies.
EPS and shareholder returns. Moving on to earnings per share, Cintas reported an adjusted EPS of $1.20, slightly above the forecast of $1.09 from 8 analysts. How does this reflect on their financial health?
Beating the EPS forecast, even by a small margin, is a positive indicator of Cintas's financial health. It shows their ability to deliver consistent earnings growth. Additionally, their commitment to returning capital to shareholders is evident with a $347.4 million share buyback and a 15.4% increase in dividends.
Operational efficiencies and future outlook. John, let's discuss Cintas' operational performance and their outlook for the rest of the fiscal year.
Cintas reported an operating income of $670.9 million, with an operating margin of 22.7%. This reflects their focus on operational excellence and cost control. Looking ahead, they've raised their full-year revenue guidance to a range of $11.06 billion to $11.18 billion, and EPS guidance to $4.74 to $4.86 cents, indicating confidence in sustained growth.
What are the key factors contributing to this optimistic outlook?
Their strategic investments in technology and talent, along with a strong value proposition, are key drivers. CEO Todd Schneider emphasized their commitment to operational excellence and long-term value creation, which bodes well for future performance.
Key takeaways. In summary, Cintas has delivered a strong start to fiscal 2026 with robust revenue growth, margin expansion, and shareholder returns. Their raised guidance reflects confidence in continued success. John, any final thoughts?
Cintas is well-positioned for sustainable growth, thanks to their strategic initiatives and disciplined execution. Investors should keep an eye on their ability to maintain this momentum.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cintas' performance in the comments below.